Hello, and thank you for joining us today. Good to see around 250 people on listening in today, which is quite exciting. Just shows the value of what we're doing at the moment. So I'm Jim Osman, CEO of the Spinoff Report. In this brief webinar today, we're looking to give you a real insight into value creation in the undercovered area of corporate divestitures, aka spin-offs. Further, we just want you to know that we're here to give you the edge with ideas you can really trust. In today's presentation, you'll hear from Jonathan Morgan, our deals analyst, on the latest situations that we think worth looking at, and more importantly, why. And also Ryan Mendy, our COO, will be taking you through a typical deal and specifically the way we look and analyse it with associated slides. But first of all, let me kick you off for an overview on what to look for in these very special situations. So how do we at TSR approach analysing a spin-off, and more importantly, how should you? The three key areas we look for here at the Spinoff Report are 1, the fundamentals, 2, the technicals, and finally 3, the insiders. So on the fundamentals, my team has been designed to ask why and to really challenge the status quo and provide that edge beyond what you will find on the internet and traditional Wall Street research. Also, we and you should never rely on numbers that are on data services out there. We look at the source data, the filings, the prospectus, the presentations, company reports. So get as many signposts and clues for valuation point in the same way as possible. Check your numbers and check them again. Lastly, always consider things relative. We live in a relative world. Secondly, look at the technicals. And by the technicals we mean, so spin-offs or parents for that matter frequently can fall in or out of indices with a change in market capitalization. Quantify this, look at the index holders of the parent, look at the holdings, and quantify the amount that has to be sold, as they really do have to sell their stock. Alternatively, will the spin-off entity enter an index and they have to buy? Further, evaluate who is in the stock and, more importantly, why and their track record. Quantify again. Finally, analyse the technical split price of the spin-off to get an estimation of where it can come out. But remember, there's no guarantee of the stocks coming out of these prices, so base everything on valuation and position yourself around this. So compare this to an IPO, for example, where the listing price is manufactured by the broker. They have an incentive to price the issue high. With a spin-off, there is no broker and no manufacturer of price. Lastly, and this is real key for me here, look at the insiders or the directors, their history, their success, their failures, their incentives. Many don't take this into account, but the best companies, in our opinion, and the best performing companies, including the spin-offs, have good quality, highly incentivized management. Few people realize and miss the fact that the incentives, certainly for the spin-off management, are given in their first maiden earnings post-spin sometimes. Also, look at the buying history of the management. Only consider open market purchases. Forget sales and partly forget stock options as well. Management sell for a number of reasons, and they buy, remember, for only one. Have they been any good at buying in the past? Are they fundamental buyers? Are they buying because it's cheap? Or are they catalyst buyers where they're buying for an event coming up? How much of the firm do they own? And on a final note, if the incentives for the management are given pre-spin, you usually get a clue in the prospectus. Always read this. Few people take the time. They see it daunting, unwieldy, but this is where you get your real clues and the gold. It's one of our main focus points here. Finally, and most importantly, remember all the above can play a part, some more than others. And remember, never overplay a situation, spread your risk, and never get emotional, and prepare to liquidate a position if assumptions or, more importantly, fundamentals change. There are plenty more if you look hard. On the screen at the moment, you'll see our track record. Gives you an idea of our recommendations over the past 7 years. It's outperformed the S&P by around 4 times. And it just gives you a clue to really what we said and when we said it. So with that quick overview, I want to hand over to Ryan Mendy, who will take you through a recent deal to see some of the above in action and also how we guide our clients. Ryan?
Thank you, Jim. So further Jimmy's points on why we exist and what we do, I want you to know that we are here to give you the edge with ideas you can trust. If you're the type of person that wants real trust and control over the companies you invest in, Jim and I created TSR as we believe if we could install our honesty, our core values of hard work ethics and pride in researching original content based on the facts with our ability to go beyond, example, asking the real questions. What do investors want to know? Early valuations. What if this company was separated? Timing. What will it take for the company to recognize the value of each newly listed company, and what are the real risks? We're not a stockbroker churning ideas so you have to trade them. We want you to understand the valuation risks. And thirdly, the potential takeover, the M&A. Who would be the best list of potential buyers post a spin-off, and what premium could be paid, and strategically why? We knew we could generate the credibility and track record we have today to deliver investors a truly higher return on the investment, or as the top seed investors in the US would call it, a credit record of how consistent you've been advising investors and so on. And therefore, with a team of 12 analysts, let's quickly switch over to predicting corporate breakups. Now, currently, we foresee and have captured 100 potential spin-off breakup targets globally from analyzing 1,100 of the most valuable listed companies around the world, and especially the US and developed Europe. Corporate spin-offs are very relevant in today's market, and for a number of key reasons. Our belief is that spin-offs will grow increasingly more attractive to savvy investors than ever before. A few reasons why. Both management and shareholders equally want growth. If you look at the shareholders investing their underlying clients' money, assets, are targeting short to long-term growth that will outperform the market. Sounds simple, but look at the management. They want to prudently grow the company to their best ability. Now, looking at the market, thirdly, it may have escaped the mind of Wall Street CEOs, but it shouldn't with you. The market has altered the way in which it delivers growth opportunities to investors worldwide. IPOs are still oversold and under-delivered. Look, 5 out of 10 that have launched in the last year are trading below where they listed on the market. Remember the overhyped or the hype about the over-invested game-changer Groupon? It's going to command the way retailers operate, shouted daily TV commentators. Yeah, great. It's down after 3 years, 80%. So with our predicted spin-offs, many of our clients are the world's most renowned activist investors. We believe what we're looking for is to unlock misunderstood fundamentals, having the new plans recognized by the other industry investors, and bringing about a market re-rating. So delivery. Every 8 weeks we release an analysis of 10 new potential spin-off stock ideas, 5 US, 5 UK European. Our goal is very direct, provide our exclusive subscribers with the ability to form advanced and alternative thinking from the market norm, to utilize our research and generate ideas to develop targeted investment strategies that will generate them big wins and a multiple return on their investment. So this, what you're seeing now in front of you, is one way in which we've done that. This is a multiple return investment we're looking for. So when I talk about investment, I talk about your investment that you make in us, and the annual fees that we charge. So this is a stock called Ingersoll Rand and the Legion. Now, here's a situation whereby over the last 18 months, go back 18 months ago, back in 2012, it announced, this is what you're seeing across the top bar there, is exactly the way that we process, uncover and service our clients and subscribers. So what we have here is, as soon as this deal was announced, we had the first piece of research out there on the street. When I say the street, we do not provide our research to the press nor to the brokers. So it's exclusively to our clients. And so we provided the early analysis on it, whether to get involved or whether to buy the stock now. We advised the buy entry. The company released the prospectus, as Jimmy pointed out. We read that and we base all of our information on the facts, and that's what makes our clients a winner, and that's what makes us return much higher returns than the market, because like Warren Buffett and all the others in the line that he's created, is we make people understand what's the truth behind all the fluff that's on TV. We provide a full analysis, 40-60 pages, looking at all the things that Jim's pointed out, come the day ahead of the split up there, you see on the black bar line. And what happens there is that's when we're on the phones again telling you day one, we'll be the first people in the whole market telling you exactly how to re-rate this. You can see how this trade worked out. Opened up at 50, for instance, on the spin-off. We said it should have opened up at 41, 40.8 for that matter. We got clients to short it, if not wait. They re-weighted down at the bottom of 41. Remember, the market was soaring at the end of Q4 last year, and this was the one stock that was valuable that was going south, and we predicted it, and that's where we got clients in. We doubled it up in our model portfolio, got clients out 2 months later, and advised them to sell it. So that is exactly how we go about making a return on investment in spin-offs and how we cover them. I will now hand you over to Jonathan, who will take you through a few ideas.
Great, thanks Ryan. So with over 50 major spin-offs taking place this year, and it's the largest calendar we've seen in quite some time, 3 current situations that would give you substantial returns on your investment are: first one, Time Warner, TWX, spinning off Time Inc., TIME. The second is Simon Property Group, SPG, which actually spun off Washington Prime Group, WPG. And thirdly, North Star Realty Finance Corp., NRF, spinning off North Star Asset Management Inc., NSAM. As Jim would have pointed out, our analysis for each situation looks at the fundamentals, the technicals, and the insiders. So based on these parameters, here are the whys or reasons for these situations to get you real wins on your investment. So currently looking at Time Warner, TWX, the $62 billion market cap media giant, it will be spinning off its publishing business, Time Inc., at the end of this week. Normal trading will begin on Monday. Post-spin, Time will be the largest magazine publisher in the US as well as the UK. Regarding the fundamentals, we see over 25% upside on our base case scenario and over 55% upside on our bull case scenario. One thing to note, for each situation we cover, we highlight our bull, bear, and base case. Now, TWX has a history of successful spin-offs. If you look at the AOL and TWC spins back in 2009, you would have made around 82% return and just over 510% return respectively on each stock. And with the takeover play for Time at the moment, we believe Meredith Corp, MDP, can be a potential suitor for the stock going forward. For reference, all of these key points can be found in further detail along with the other 2 names in our 40-50 page full analysis report. Now, let's just move on to the largest retail REIT in the U.S., Simon Property Group, SPG. So this $51 billion market cap company has just recently spun off its strip centers and its Class B malls under the name of Washington Prime Group, WPG. Now, looking at the technicals of this situation, we expected and still expect some selling pressure on WPG. Previously, index funds held a significant 30% stake in the former parent SPG, and based on these facts and the fact that WPG was just not going to enter the S&P 500 due to the market cap size, this gives us, and more importantly, it gives our clients an opportunity to pick up the spin-off at better valuations. Also to note, 2 key executives from the parent company will also be serving on the board of the spin-off WPG. So a name like David Simon, you probably know him as one of the top 4 CEOs in the U.S. He's actually going to become the director for WPG, and the current CEO of SPG, he's actually going to be the chairman of WPG going forward. Both are actually said to have significant holdings in WPG, and the new CEO that they're bringing on will be bringing a wealth of experience as a turnaround specialist. So in our view, we see WPG as a great investment at the right level. And last but certainly not least, the U.S. commercial REIT North Star Realty Finance, NRF. Now, NRF will be spinning off their asset management business, which is going to be named North Star Asset Management Inc., or the ticker for that is NSAM. Now, we expect NSAM to be listed just above the $2 billion market cap level, and the spin-off to take place by the end of June. No dates as yet for this one. Now, there will be an attractive dividend play for the parent company post-spin at around 7.5%. And the spin-off itself, the asset management firm, well, it's going to become a fee-based business, so therefore a bit more stable business with regular cash flow stream, looking to grow the company by acquiring other asset management businesses going forward. Now, focusing on the insiders for this particular situation, the spin-off NSAM will be led by the current management team, including the CEO of the parent company NRF, which the team itself has a proven track record of managing and growing its investments and growth opportunities in the respective platform. So the strong, experienced management team, they're actually moving over to the spin-off, which says a lot to us. A strong management team is a classic example where spin-offs create opportunities for shareholders. To really complement all of our analysis, we have also done a 10-year spin-off study in association with Deloitte, examining U.S. spin-offs with regards to timing, performance, which sectors perform better than others, and so forth, because at the end of the day, we rely on the facts. In closing, these are ideas that you can trust, and that will give you that edge you're looking for. Hopefully this was helpful to you. I will lastly pass it on to Ryan for closing remarks. Ryan?
Okay, Jonathan, thank you very much. For everybody listening, one of the things I really want to point out is that people don't buy what we do, they buy why we do it. Everything we do, we believe in challenging the status quo, we believe in being different. We challenge that status quo by making stock ideas we discover and analysis we have easy to understand, neatly designed, by thinking differently, and then presenting our valuations and recommendations both personally and ahead of time. We just so happen to provide investors with investment research that significantly outperforms the market. If you want to see it or you want to buy it, let us know. Here are the details that you will be able to talk to us on. And when I come back to a couple of things just very quickly, it's with regards to the new the actual new situations that are coming up that Jonathan would have just highlighted a few of them on. The 50 parents that we've got coming up this year, 36 were the parents that spun off last year. And now we've got nearing 60 because there's been a dozen that have gone through already this year. And there's over 100 newly listed companies that will be on the market this time next year. What we've managed to do is, like Jonathan was highlighting on a few of the companies, over the last 6 years, our track record we happen to have delivered an average return of 66% on all of our recommendations that we've made to the market now. So I've just given you a view on what we do is on how we present the edge with our ideas that you can trust. Now, what I do want to point out is here are our details. I'd be delighted to hear from you. And here's what I want you to do. If you've connected with anything we've shared today, and I mean anything at all, then just email us immediately after this call, and call us. We promise no sales pitch today. It's not our style. We are about how we can give you the edge with ideas you can trust. So if that sounds fair, thank you. We look forward to talking to you shortly. And by the way, if you want the slides plus the recording, please email us now. Let us know, and we'll be happy to have a chat with you going forward. And equally, we'll be back with more of these webinars in the future. Happy to hear your feedback and talk to you soon. Thank you.